The spring real estate market is waking up early here in Brantford, Ontario. We just finished a very busy February, and I've got all the information on exactly what's going on in the real estate market in this video. Now, make sure you watch through the entire video because after the market stats, I'm going to give you some very specific information. If you're a first-time home buyer, you're thinking about doing a move up or potentially a move down. And even if you're an investor in this environment, I'm going to tell you what to expect for this year and how to win. Welcome back to the YouTube channel. My name is Jeff Thibodeau. I'm a local real estate professional right here in my hometown of Brantford, Ontario. I've been helping people just like you buy and sell their properties here for over 15 years. And it's going to come as no surprise that my background is actually in market research. So I love digging into the statistics and explaining exactly what's going on in the real estate market. If you're planning a real estate transaction this year, or you just want to have a conversation about what's going on in your situation, I love hearing from you. So please reach out using my direct contact information. It's all in the video description below. And while you're here, take a minute and hit that like button for me. It really does help me out in the YouTube algorithms and lets me know that you're enjoying these videos. And if you like content like this, hit the subscribe button, turn on those notifications so you get my future videos dropped right on your YouTube home screen. Last thing before we get into it, all of the charts that I'm going to show you today, they were all custom created by me, and you can find them all back on my website in a blog post. I will link that in the description below. If you want to look at these charts in any more depth or read along with the analysis, it's all over there for you to read after this video. Okay, let's dive into the February market stats and make some predictions on where the market is headed in 2024. The median sale price for a home in Brantford was up 4.2% last month from January, coming in at $620,000. This is actually up 3.3% from where it was at the exact same time last year. That's a modest increase of $25,000 from where the number was at in January. The most recent low point was back in November 2023, where the median sale price dropped to $580, and we are currently up 7% from that point. Now, the median sale point only tells part of the story. On this chart, I break down between detached homes and townhomes, our two biggest market segments, and also break them down by $100,000 price ranges to show you exactly where the homes are selling in our market. In blue, you can see that the majority of the townhomes were selling in the $600 to $699 price range, with another chunk of them selling between $400,000 and $600,000. So there really is a choice for everyone in the townhome market. The red bars represent detached homes, and you can see there's actually a much wider variety of price points available for fully detached homes. The $700,000 price range was the most active, but you can see that there's actually quite a bit of activity all the way from $400,000 up to that $800,000 price point. Below $400,000, the issue is there's just not that much choice. There's very few homes actually available, and the homes that are priced there, they're typically very small or in need of significant renovations that most buyers aren't willing to take on. The opposite is true above $800,000. There's actually quite a lot of choice available, but right now the demand for those properties is still fairly low, so we're just not seeing that reflected in the number of sales last month. Last year, the median sale price for the entire year came in at $635,000. That was down from the peak year of 2022, where it was $688,000. But it is up from the 2021 number, which was also a pretty hot market when it came in at $622,000. So far this year, with only 2 months of data, we're already at $615,000. And that means prices only need to rise another 3.3% this entire year for us to be back to last year's levels. And I think it's a pretty safe bet to assume that we will be past 2023 pricing levels. And so the dip will be in the rearview mirror in just the next few months. Now, this is especially true when we get to talk about interest rates later, when we're expecting interest rates to start coming down in Q2 and continue throughout the rest of the year. That should drive prices back up in the second half of the year. Now, speaking of interest rates, this next chart is a new one for this month, and what I tried to do is correlate the median sale price here in Brantford with the Bank of Canada interest rate decisions. So I've tried to show that here on this chart to give you a very visual representation of how these two have been related over the last couple of years. So the median sale price of a home here is in red, and in the light blue line is the Bank of Canada rate. You can see on the left side of this chart where interest rates were dropped to almost zero. They came down to 0.25% in response to the pandemic. and then they were held flat there for quite a long time. While that blue line is flatlining at the bottom of the chart, you can see the aggressive uptick in the red line, the median sale price of homes. And almost immediately is what you see happen when they started to raise the rates in March 2022. You see that blue line heading up. You see the immediate effect that had, bringing the red line, those prices back down into reality from that unsustainable peak. But the interesting thing is really happening on the right side of this chart, where you can see that the pricing pressure started to push back up again, even though rates have not yet come down. In fact, rates have been raised a couple times at the end of 2022, and then again in the summer of last year. And all that has still created upward pressure on the pricing. Now we're seeing that same trend continue. As we mentioned, the previous low point was November of 2023. And since then, prices are up 7% without rates going down. We've had rates being held, and some of the fixed rate products have come down a little bit. But you can imagine what's going to happen next when rates do come down. As that blue line starts to lower again, we should see an almost immediate effect pushing the red line, the median sale price of homes, back up. So speaking of interest rates, the March Bank of Canada announcement just passed us before recording this video, and it was no surprise that they announced a no change to the Bank of Canada interest rate policy. So that's the 5th consecutive meeting where they've held the rate at 5%. This has been the most stable that the interest rate has been in the recent years. There are 6 more announcement dates set for this coming year. I've got them up here on the screen. And the next chart that I'm going to show you is a summary of what the big 6 banks predict is going to happen over the year. Now, instead of trying to predict interest rates myself, the economists at these big 6 banks really do represent the majority of the financial marketplace here in Canada. So this chart is summarizing up their opinions that they've written in their reports and been on the news. And you can see that here in Q1, that would be January, February, March, nobody predicted that rates were going to come down at all, and that came true. So we're sitting here after the March announcement, still at the 5% level. But if we look into Q2, which is April, May, June, remembering that there's 2 potential announcements there in April and in June, that every single bank is predicting that the rates will come down. We're seeing anywhere from 0.25 to 0.5, depending on which bank you look at, but it's unanimous that everyone's predicting that the rates will be lowered in one of those next 2 meetings. Now, most people are predicting it might not be the April meeting, so to expect it to come down potentially in June. And I think that's the difference you're seeing here, whether the banks are predicting 1 rate drop or 2, because it would be logical to think that the rates are going to come down a quarter point at a time. But it's interesting to look further along this chart. And of course, the further you look out in the future, the less sure these predictions are. But it's interesting to see that every single Canadian bank is predicting the same thing, that rates are going to continue to fall through Q3 and even through Q4. And between the rates, we're looking at, anywhere from the rates being down a full point to 1 3/4 points, with National Bank predicting we end up at 3.25% by the end of the year. So you can see that everyone who's in the business of actually predicting this is pretty confidently saying that rates are going to come down this year. Now, it's important to remember that every time the interest rate comes down, it increases consumer confidence. And that's really what we're looking for out there in the real estate market. Buyers have to feel like, hey, this is a good time for me to invest in a home. I'm going to be able to afford my mortgage payment. My job is safe. And interest rates coming down gives people that confidence. It also lowers payments for anybody that's on a variable rate, flexible mortgage, or has a credit line that they're paying interest on. And at the same time, it's going to instantly increase the borrowing power of all the buyers who are out there applying for loans. So any move down in the interest rate is going to be seen as an instant stimulus into the real estate market, both from a psychological point of view and also from a purchasing power point of view. Interest rates will really be one of the big stories to watch for the real estate market, but it really is only half of the story that we need to tell. The other half of the story is going to be the balance of supply and demand. So in February, we had 95 homes sell, And that is a 27% increase, which sounds like a big number, but it's typical for demand to go up significantly from January to February. So it was what we expected. And it's down just slightly from where it was at this time last year. Now, if we look at the chart, we can see that March to June tends to be the busiest months seasonally here in the Brantford real estate market. So really watching what happens over the next 60 to 120 days in terms of the overall demand will give us our big indication of how the rest of the year is going to play out. Now, the interesting thing is that we typically see the spring peak and then demand fall throughout the remainder of the year. And that was even more dramatic last year because we did have a couple summer interest rate hikes. Now, this year we expect, as we just saw in those previous charts, the opposite to be true. So I'm predicting that we're going to have a typical spring, but then with interest rates coming down, that may create the demand to stay sustained throughout the second half of the year. On the supply side of things, there were 187 homes come onto the market in February, and that was up just 11%. Remember, demand was up 27%, but supply only up 11% in February. And it was up slightly from where it was last year. So a few more homes coming on the market this February than last February. Now, just like the demand chart, the supply tends to be busiest in spring also, with March to June being the busiest time of year for people putting their homes up on the market. So we're going to keep an eye on these two numbers really closely over the next couple months. And as they play out, it's going to give us a really good indication of what we can expect the second half of the year to be. Because if we have higher demand numbers than expected, the supply is really not going to be able to keep up. And we could find ourselves in a much hotter real estate market than we've seen for the last 2 years. Now, one thing I need to keep pointing out on these videos is there's a little bit of a gamification of the real estate market stats that goes on out there. And a lot of the new listings every month, they're actually not new at all. And you've probably noticed this if you are in the market looking at those refreshed listings. You'll think, hey, haven't I seen that house on the market before? Well, there's a common practice between real estate agents and home sellers to actually pull a house off the market and then relist it. And on the system, it counts this as a new listing again, even though it's not really a new listing. And this has been happening for the last couple of years during the hot market. The reason is quite simply is on public websites like realtor.ca, it's going to reset the days on market to 0. It's going to ping people it again as a new listing. So it does create a little bit of extra marketing energy for the property versus just simply, changing the price. But it does skew our statistics because as you can see in February with it being 40%, that's not a small number. It means that, instead of 187 new listings, there was actually only 112 actual new listings. And when we compare 112 new listings to 95 sales, we can see that those numbers are pretty close together. They're only separated by like 17, extra new listings versus the sales. So that's a much tighter market than if we're thinking 187 versus 95. And so this is a number I actually have to go in and manually calculate. You have to look at every single listing and see whether it was new or it was actually has a history of being listed before. And so this story is one you're not going to see in the headlines, but it's one that I track very closely because it is important to understand what are the real new listings and how is that affecting our inventory. Now, speaking of inventory, this number you can't game at all. So inventory is the true number of homes for sale over the course of a month. And in February, it rose 4%. And it's typical that inventory is rising this time of year. Although if we look back over previous years, we would have expected to rise more than 4% going from January to February. So inventory is not quite yet building. And we could see that by the previous chart that there were only kind of 17 excess homes when we compare the real new listings versus the sales. Last year, inventory peaked at 347. You can see the high point there. It was around September and October. And I actually predict this is going to be a little out there prediction, but I predict we actually have a lower peak inventory this year because I believe inventory is going to struggle to build throughout the spring. The demand is going to keep up with the new listings. And then in the second half of the year, with interest rates coming down, you're going to see demand actually hang on, and you're not going to see people putting their homes on the market. It's usually spring is the big boom of that. So I think that we will look back and think that we actually had our peak inventory market of 2022, And low inventory is one of those indicators that we're going to have a hot, fast-moving market and prices are going to get pushed up. Now, this chart really shows a visual representation of the relationship between inventory, the gray bar, versus the demand, the red bars. And you can see on the left side of this chart, that was the hot market before the interest rates started going up. The red bars are actually taller than the gray inventory hiding behind it. And that means inventory was turning over faster than 1 month. It was an extremely fast-paced market. And then throughout 2022, you can see inventory building back up and that gap forming between the height of the red bars and the overall inventory in gray. But what I want you to notice is there is last spring, you can see how the red bars were building up and they were almost reaching the height of the gray bar. And that was until in June, July, we had 2 more interest rate hikes, and that caused the demand to slow down and some more inventory to eventually build. And that's where you get that peak in the back half of the year. Now, again, if we follow, the logical conclusion this year that the spring is going to be very typical and the same as last year, where the demand's going to build up and it's actually going to, be a pretty busy spring market. But then the back half of the year, we're going to have interest rate cuts. You could see how those lines could come together and you would actually have a sustained demand through the back half of the year, and inventory won't actually be peaking in the fall. We could have actually inventory falling in the fall and winter months to a new low point in the winter. This will be very interesting to watch, and it is really kind of on a knife edge here if it all plays out as expected. Now, the relationship between inventory and demand is actually mathematically, we use that to calculate what we call the month's supply of homes. And this is the pace of turnover in the marketplace. And generally, a low number indicates a seller's market. It means that there's not a lot of choice out there, but there are a lot of buyers. So it's buyers are competing for the best listings, potentially having multiple offers on properties, which pushes the price up and brings the time to sell down. On the other side of the chart, if we have a high number, that would indicate a buyer's market where there actually is a lot of choice available and not as many buyers. So it's really the sellers competing with each other to put the best price on their home and negotiate more aggressively to get their home sold. So this chart's interesting, but it only shows part of the story. And what I've done on the next chart is I've actually broken apart this month's supply line into different price ranges. And what you can see here is that the 2 lowest bars, it's kind of the light blue and the red, that is homes priced under $600,000 and from $600,000 to $800,000. You can see that they're actually, very low numbers, and they've stayed that way throughout most of the market conditions. Now, these are the more affordable price points here in Brantford. Now, the interesting thing is if we look up to the blue line, this is, I felt this happening in the market last year. This is $800,000 to $1 million. And, back in the hotter market, that blue line was running right along with the other lines. But throughout that interest rate hiking cycle, those price points really slowed down. You can see the blue line racing up and then coming back down, becoming a busier market in the back half of the year. And it's only running a little bit higher than those more affordable price points. So the energy's coming back to the $800,000 to $1 million market. And that's typical as the market speeds up again. But what you're seeing at the white line, these are the $1 million+ homes. And, when the market was hot, it wasn't uncommon to see, regular homes kind of selling for $1 million, 1.1. It was a little mind-blowing, actually, for someone who's lived in Brantford their whole life. But you can see how aggressively that white line took off. It really was the $1 million+ price point that completely stalled out when interest rates started hiking. And that's because the out-of-town buyers slowed down too. So if you were selling your Toronto home for $2 million and then bringing that money to Brantford, it was really easy to make an aggressive offer on a home or pay a little bit over asking for that property. And that behavior slowed right down. We saw it falling again into the winter, but what you see at the side of this chart is it just spiked again in February. So it's on the way back up. So the energy really hasn't returned yet to that higher price point. And that will depend a lot on that money flowing from more central from the GTA back towards Brantford, because you're not really seeing first-time home buyers going out and getting $1 million mortgage. This is typically a property that someone is, trading their equity from their higher priced home in another city, and they're moving on down to Brantford. So I've got a couple interesting comparisons to show you here, some new charts that we may have not looked at before. This next chart, I'm actually comparing all the sales. So every red dot on these charts is a sold house. And we've got the January data on the right and the February data on the left. And again, the medians can kind of wash out what's actually going on. I think it's important to show here, that bold white line that I've put in there, that indicates a full price offer. So all the red dots above that bolded white line indicate homes that were sold above asking price, and anything below is obviously had been negotiated off. And the couple things I can see here, number one, as I put in the big data, is we've gone from 21% of the homes selling at full price or better to 28%. So that is a significant increase in just 1 month. So the bidding wars are back. And you can see some of those red dots are taller and there's more of them happening. Now it is clustered around the more affordable price points. That's where we are seeing a lot more of those bidding wars happening. But that tells you that there's more buyers out there than there are quality properties for them to buy when more than one person is bidding on a property. The other thing that it's a little more subtle to see, but below the line, you can see that the red dots have kind of pushed up a little bit. So we were seeing more people negotiate more off the asking price. And that does, again, represent those stale or older listings. Buyers were out deal hunting, negotiating good deals, where in February, we saw less of that. You can see that there's less red dots in the bottom of the chart. So both of those are trends that I expect to continue throughout the year. We'll see the red dots push up closer to that line and to see potentially more over asking offers happening as we move into March and April. Now, looking at this same data, but representing the time on market instead of the offer percentage. And the interesting thing you can see here is I've bolded the 30 days on market, so 1 month on market. And in February, 57% of the listings were selling in under 30 days on market, where back in January, that was only 36. And so you still do see in February a lot of dots, above the 30 days. So those are properties that have been listed for a long time. Potentially they've canceled, relisted, like we were talking about earlier, changed their price, and finally they've gotten an offer. But what you really notice if you look at the bottom of this chart is just how many more red dots are concentrated under the 30-day line. And this is typical of a market that's speeding up, is the buyers are really paying much more attention to the new fresh listings versus the ones that have been on the market for quite some time and are just readjusting their prices and changing it. So, big advice if you are bringing your home to market is we want to try to get the job done in that first month. So that means doing everything right from the beginning. I've got all kinds of other videos on that, so I'm not going to get into it today. Now, as we wrap up this video, I want to give a little bit of advice, what all this information might mean for you in your situation. First of all, if you're a homeowner, you're not really planning a move, you're just interested in the value of your home. Well, good news, right? We can expect after a volatile couple of years that typical home appreciation, which we expect to happen every year, that's part of why we own homes, is because they go up in value. I think we're back on that track, right? After a volatile couple of crazy years. Also means that if you have a variable mortgage or you are holding a credit line on your home, you can expect those payments to start to come down later this year, and for the cost of borrowing, to get a little more affordable. And so this is all great news if you already own a home and you've been stressed out over the roller coaster ride the last couple of years. Now, if you're a first-time home buyer and you've potentially been waiting for your opportunity, or you felt like you've been priced out a little bit, I think right now the window is open for you to get into the market. And if we wait too long, we might find ourselves in a situation where, yes, potentially borrowing costs could come down later in the year, but I think they are going to cause prices to go up. So the absolute, amount of your monthly payment might not be any lower later in this year. So I think it'll be interesting to figure out what you qualify for and potentially, get out there in the marketplace a little earlier than your other buyers. And that would be now, like kind of pre-spring, end of winter, early spring. And this might be your best option to get into the housing market before we start to see prices start climbing back up. Now, if you are a buyer looking at the higher price points, I think you've got a big opportunity right now in the market, as we saw on that month's supply chart, that the homes, especially like over $800,000, over $1 million, if you do have that kind of money to spend, like the world's kind of your oyster here in Brantford right now. You have a lot of choice and a lot of negotiating power. And that should stick around for a little bit, But as the energy comes back into the market, it will flow uphill back into those higher price points. And the deals might not be there later this year. So if you are a higher priced buyer, I think there is a great opportunity to pick up a property at a good deal and then watch that home appreciate later in the year and, of course, over next year. Now, that brings us to the situation where, you may be in where you need to sell a home and buy your next home. And this is a little more complicated because we've got to plan both of these transactions. So considering selling your home is going to depend a lot on what price point it's at, what condition it's in, and exactly where you're going next. And we really want to have a deep conversation about that for your specific situation. Now, I will say inside of that, I think there's a huge opportunity right now for people who are considering making a move up. If you can remember from those charts, the lower priced homes are selling very quickly, potentially in bidding wars. So you have the opportunity to sell a home in a seller's market, and then you're going to move up to a bigger, nicer home. Those are still in a buyer's market. So you're able to potentially win on both sides of the transaction. And that's not always available in the real estate market. So there's a good opportunity there if you can afford that move up home. For investors, very quickly, I think a lot of opportunity is back where it hadn't been for the last couple of years. Rents are at all-time highs and they don't look to be going down anytime soon. Vacancy rates are extremely low. So investing in single family and multifamily rentals, I think there's a big possibility. Obviously, it can be a little harder with the interest rates. So you may need a bigger down payment or you potentially buy a home that needs to be a bit of a fixer upper. Also, because rents have escalated so quickly over the last few years, buying a home with existing tenants, that property might financially not make sense. So we're definitely looking for, vacant properties or properties that are going to have their first set of tenants in them. The other big opportunity that I'm seeing, and we can show it to you right in the sold data, is the game of renovation and home flipping is back full force. There is a huge gap. Like the ugly homes, the homes that flippers want to buy, they are not selling for premiums. They're still pretty much being ignored by buyers, where the pretty homes, the completely flipped homes, they are attracting all the attention, and some of them are getting pretty wild bidding wars, selling for more than I would expect them to. So I think the gap is back open for those of you that are in that type of business to grab a deal, turn it around, and sell it at a premium. Now, with all this being said, whatever your specific plans and goals are, it's extremely important to get advice for your situation and not just blanket advice. Obviously, we're giving you really detailed advice on the Brantford market here today, but when it comes down to you, your property and your situation, we want to dig into it a lot deeper and create a custom plan that lets you win in this market. And that's exactly what I do for my clients every day here in Brantford. So for a confidential strategy session about your situation, all you got to do is reach out to me using my direct contact information below. You can call, text, email me, hit me up on WhatsApp, leave me a comment here, whatever. I'll find you. I'm checking my messages all the time. So just hit me up and we will start to put a plan together to make sure that you're winning no matter what your plans and decisions are. Thank you for watching this video all the way to the end. I think we went over 30 minutes today, but there was a lot of interesting data to talk about. Don't forget, if you haven't already, to hit that like button, especially if you made it this far. It does help me out in the algorithms. It also shows me that people are enjoying these videos, and it only takes 2 seconds. So just go ahead and click it right now. And remember, if you like videos like this, hit the subscribe button, turn on those notifications. So as I create new content every single week, it shows up right on your home screen. Thanks again for watching. YouTube thinks you're going to like this video next, and I look forward to seeing you on the next one.